This is Kurt Heisinger, accounting professor at Sierra College and author of Managerial Accounting. This video outlines three different approaches to allocating manufacturing overhead to products. We're going to focus on two of those three approaches very specifically in this video, and then the third, called activity-based costing, will be in a separate video. Before we get started with how to allocate manufacturing overhead, let's review what we mean by manufacturing overhead. Remember that manufacturing overhead costs are related to production, but it's all costs other than direct materials and direct labor. So these are all the production costs that are not easily traced to individual products. Examples are below, things like factory rent, factory utilities, indirect labor, indirect materials, equipment depreciation in the factory, any maintenance on the factory, all those costs that are not easily traceable to the different products that we are manufacturing within the factory. The goal then is to come up with a way to allocate those overhead costs to our individual products, and that's what we're going to be talking about in this video and in other videos as well. There are three basic approaches that are typically used to allocate overhead to products, and you'll see those here. We have the PlantWide Allocation approach, the department allocation approach, and what we call activity-based costing. Activity-based costing will be in a separate video. We're really going to focus on the first two approaches in this video, the PlantWide approach and the department approach. The PlantWide method uses one predetermined overhead rate for the entire company to allocate overhead to products. And if you take a look at the videos that have been posted related to job costing, we get into this in a fair amount of detail. So this is a bit of a review here. So again, we use one predetermined overhead rate for the entire company. It's typically based on direct labor hours, direct labor costs, or machine hours. It's up to the company to determine what they want to use as the allocation base. The predetermined overhead rate calculation is shown in the second bullet point here, and we take our estimated overhead costs divided by the estimated activity in the allocation base. And as I mentioned, that allocation base can be a number of different bases, but if we're using the PlantWide method, we pick a base and stick with it for the entire company. This tends to work well for companies that have simple operations and simply produce a few similar products. So let's, in the next slide, talk more about how this would work. I'll be using this example, the Sailrite example, for the three different methods of allocating overhead. So we'll start that example here. Let's assume that our company name is Sailrite and that we produce two different types of boats, two different types of sailboats. We produce a basic sailboat that you see here, and we produce a deluxe sailboat. And as you can imagine, the basic sailboat is a no-frills boat that doesn't have a lot of fancy features, relatively low cost from our perspective as a manufacturer, and the deluxe sailboat has all of the features, all of the fancy features, and is more expensive to produce. What you see then in this circle is the total overhead cost that we expect to incur, and that's the $8 million that you see right here. This is establishing our predetermined overhead rate, and we're going to allocate our overhead one plant-wide rate, right? Plant-wide allocation. We're going to allocate our overhead based on direct labor hours, and that's what you see here. So we have 250,000 direct labor hours that we expect our workers to work. So let's say for this coming year. And that gives us, when you take $8 million in estimated overhead cost divided by our estimated activity base level, that is the 250,000 direct labor hours, that gives us a rate, a predetermined overhead rate of $32 per direct labor hour. And again, this is review in our job costing videos. We get into this in more detail. But what that tells us is for every direct labor hour that is worked on either one of our boats that we produce, $32 in overhead gets allocated to that boat. Now we want to take that predetermined overhead rate and use it along with our direct materials and direct labor cost information to determine the product cost per unit for each boat that we produce. And remember that the product cost includes direct materials, direct labor, and manufacturing overhead. So the direct material and direct labor costs are going to be given for this example, and we're going to take a look at this $32 per direct labor hour rate and use that to help us determine the overhead cost per unit, and then we'll add it all together to get a product cost per unit for each boat that we produce. Here's the detail that shows us the product cost per unit for each boat that we produce. And this is very important information for most companies. They want to know how much it costs to produce their individual products. So here's our product cost per unit. Again, product cost per unit includes direct materials, direct labor, and overhead, all added together. Here are the two boats that we produce, the basic and the deluxe. You're given the direct materials cost information, so it's $1,000 for the basic sailboat and $1,300 for the deluxe sailboat. Again, go back to our job costing videos if you'd like to see where that information comes from in general. Direct labor is also given for each product, $600 for the basic sailboat. You see that right here, and $750 for the deluxe sailboat. And then the overhead, which again is the focus of what we're doing here, the overhead cost per unit works out to $1,280 for the basic sailboat and $1,600 for the deluxe sailboat. And you'll see in these footnotes down here exactly how those numbers are calculated. The $1,280 is calculated by taking the $32 per direct labor hour rate times the number of direct labor hours that are required to produce that particular boat or that product. So $32 per direct labor hour times 40 hours is $1,280, and that's our overhead cost per unit. So the total cost per unit, product cost per unit for the basic sailboat is right here, $2,880, and the total product cost per unit for the deluxe sailboat is right here, $3,650. Now that we know how to figure out the overhead cost per unit using the plant-wide allocation approach, let's look at another method, and this would be used independently from the plant-wide approach. So let's say that we're not using the plant-wide approach, and now we decide we want to go ahead and use the department allocation approach. Well, now what we do is instead of using one predetermined overhead rate for the entire company, we're going to use one predetermined overhead rate for each production department. And the rate is still calculated the same way, that you'll see in the second bullet point here. We take the estimated department overhead costs, rather than company-wide overhead costs, it's by department, divided by the estimated activity in the allocation base. And we can use, in the third bullet point you'll see this, we can use different allocation bases for each department. So it provides for a little more flexibility and hopefully more accurate overhead cost information for each of our products when it's all said and done. And this works well for companies with simple operations within each department, but the companies that have different activities across departments. And we'll take a look at an example of this for Sailrite next. There's a lot of information in this slide that we'll go through in a fair amount of detail. So what we're looking at here is an example of using the department allocation method for Sailrite to allocate overhead to the two products that Sailrite produces, the two different sailboats, the basic sailboat and the deluxe sailboat. This pie chart still represents, as it did before with the plant-wide approach, $8 million in overhead that has to be allocated. So let me see if I can show you that here. And then we have two different predetermined overhead rates that we're going to be using. But if you look at this 5,000 right here, I don't want to mark this up too much, but there's 5 million, and you look at this $3 million right here, add those up, that's our $8 million. So we'll come back to that in just a second. We have two different departments within production. We have the hull fabrication department, and we have the assembly department. So look at the hull fabrication department as a somewhat automated process where the hulls for the boats are produced, and look at the assembly department as somewhat labor intensive, where you've got lots of workers putting these sailboats together. So then going back to the hull fabrication department here, we're going to establish one predetermined overhead rate for this department based on machine hours rather than labor hours, because there's a lot of machinery involved, and it would make sense then that our overhead, most of our overhead costs are related to machinery and are related to the use of machinery. So the rate that we have here is the predetermined overhead rate is determined by taking $3 million that is related in overhead, related to this department, and dividing it by 60,000 machine hours. That's what we project we'll be using in this coming year. So $3 million divided by 60,000 machine hours gives us a rate of $50 per machine hour for this department. What that tells us is if we're building a basic sailboat and we use 1 machine hour in this department for that basic sailboat, we get charged $50 in overhead costs for that boat that we're working on. In the assembly department, we have a different rate. So look over here at the assembly department. In this area, as I mentioned before, we use a lot of direct labor hours. So we're going to come up with a rate per direct labor hour, and we determine that rate by taking $5 million, those are the overhead costs associated with the assembly department, dividing it by our projected direct labor hours, 217,000 direct labor hours, and that gives us an overhead rate of $23 per direct labor hour. What that tells us then is if we're building a basic sailboat and it's in the assembly department, and one worker spends 1 direct labor hour on that boat, then that boat gets charged $23 in overhead costs. The goal here is to use, I'm looking at the second bullet point on the left here, the goal here is to use the allocation base, that is machine hours or direct labor hours in this case, that best drives overhead costs for each department. So again, in the hull fabrication department, it's machine intensive, so it makes sense to go ahead and allocate overhead based on the use of machine hours. In the assembly department, a lot of direct labor going on there, and so it makes sense to use direct labor hours as the allocation base. So we've got 2 rates here. It could be 3 or 4. It just depends on the number of departments that we have as a company, but we kept it fairly simple here. But we have a rate for each department that is used to allocate overhead to the individual products. I'm going to have a separate video that relates to how to allocate overhead using activity-based costing. It's a bit more complicated than this, although not a whole lot more complicated, but a bit more complicated than this and somewhat effective. So we'll take a look at that separately in a separate video.